This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade here on the day Tuesday, we had that USDA WASDE report out for July, but we had a lot of risk off in the markets with outside money flow, etc. Matt Bennett of agmarket.net joins us. Matt, great to have you back on, sir. Not a pleasant day for us to talk the grain market today, but still nonetheless great to have you back on.
Yeah, I appreciate it. You're right. It wasn't a great day. You come in here on Sunday night, call the market higher, fireworks right off the bat. You're looking at 650 plus corn again, and happy days are here again, right? And then, a lot of folks are thinking, I want to buy this thing. This thing's going to take off and go. We got 2 weeks of hot and dry forecast. It's pollination. We all know that. But the thing is that it just felt like, to me, maybe a guy hadn't ought to be buying, the open on a Sunday night whenever you're up that strong. I certainly understand why people did it, but the markets have been so shaky lately that I think one thing that you've seen that we'll get into in more depth is some of these funds have, kind of backed away and said, you know what, I'll come back whenever this thing is a little easier to figure out. Or, it's just been like so crazy trying to trade these things. But you're right. Report wasn't bad. It was neutral, maybe a little unfriendly, but quite frankly, the numbers were so close compared to normal that you wouldn't think that we would drop like we did. But we needed a bullish report today, I think, to kind of stem the tide of this complete risk-off event that we're experiencing over the last 24, 36 hours, and we didn't get it.
We did not get it. And to me, to your point, yeah, the report just felt kind of neutral. And honestly, Matt, it didn't feel like we even really traded the report at all. It came out at 11. We looked at it. If anything, it maybe pushed us a little farther to the downside because we didn't get any bullish news out of that report. But it really just felt like money flow today, and it was money flowing out of the grain and oilseed sector, Matt.
Would you have ever guessed that you get a 230 million bushel carryout on new crop soybeans and see beans settle 62 cents lower? No, of course not. Would you have thought that you would have had a bullish acreage report for beans and see a week ago Friday into the next Tuesday, 2 straight trading sessions with taking the 4th off? You settled $1.42 lower in those 2 days. This market has not been for the faint of heart by any stretch of the imagination. And so you got to stop and ask yourself as a producer, when you get in a situation like this, I know a lot of folks want to figure the market out, and you don't want to sell at 650 because by golly, it was 750 before. I've been there. I've beat myself up over that stuff before. But let me tell you something, Jesse, a lot of folks in parts of the Corn Belt, I want to stress parts, have gotten a copious amount of rainfall since July 1 that they didn't expect to get. If you're one of those producers and you're still wondering whether or not to sell $6 corn or above, then I think you need to go back to the basics of, hey, let's not try to figure this market out. Let's figure out if we can make money. And if you can make money after getting 4 inches of rain, on July the 6th, 8th, 10th, whatever it was, I think you can make a lot of money even at the market today. And so, I think we need to break it down a little bit, quit trying to figure something out that's not able to be figured out, because you and I can agree on one thing. A lot of this has to do with China talking about, hey, we're going to put more restrictions on our people again. Does it make sense to all of us over here who've kind of moved on, I think, from that narrative as far as how they're handling it? No, it may not make sense to us, but that's what they're doing. And so then you look over at the crude oil market, just getting hammered today. And you can't expect whenever the forecast injects a little more rain, crude oil is getting hammered, China issues, you can't expect we're going to do anything other than trade lower. I think we're almost borderline lucky we didn't settle down the limit on corn, because it sure looked like it wanted to do that for a while.
I would agree with you 100% with all of that. And to your point as well, trying to figure this market out, if we could figure it out, we would be billionaires probably. But it's impossible to figure out really what's all going to happen. I look though at this market, huge down day today. I look at basis across the country. It's still relatively firm. It still really gives opportunity to make some sales if you go on the cash side right now, Matt. And it's something that has been interesting to me to watch basis remain fairly strong.
For sure. I talked to a grower in Southwest Kansas. He texted me right before you and I came on the air, and he sold the last of his corn. I'm talking 125,000 bushels of corn yesterday. You know what he sold it for? $10 a bushel. $10 a bushel. And so, we talked to last week. I told him, I said, if you do get a big run up on Sunday night into Monday, have an offer on the board. And what did he do? He set his sights high, threw this huge offer out there, and they said, guess what? We're going to take it. What happens, when you get in the Panhandle of Texas or southwestern Kansas, you get in these areas where you've got a lot of cattle. You've also got some ethanol plants here and there because folks like to feed DDGs. You get in a bidding war between the guy that's feeding the cattle and the guy that's wanting to buy the ethanol. And quite frankly, you've seen basis levels in that part of the world at levels I've never seen before, quite frankly, for cash corn. So you're exactly right when you're talking old crop. Hey, let's talk new crop for a second. Yesterday morning, I actually sold corn in my part of the world for the first week of September for $7.50 a bushel. What is the bid as we speak? It's $6.86 a bushel. Am I going to be right? I mean, are we going to be over 750 by the time we get there at some point in time? We very well may be. I don't know if they're going to still be offering that basis. My gut feeling is that once they get enough bushels bought, of course, they're going to back off that just a little bit. But guess what? I can't go wrong selling 750 corn. I know that as a farmer. I've got the farmer hat on right now. If I'm talking from the brokerage side of things, I've got to look at it from the farmer's perspective in that you can't go wrong selling $7 and above corn if you've got a crop or if you're buying a healthy level of crop insurance so you have insured bushels. We've got to remember to use tools like insurance, in our marketing plan. And this is a year where there's a lot of haves and there's a lot of have-nots. I've talked to several folks that are dry as a bone, can't seem to buy rain. I feel for them. It's a very frustrating, a totally different type of marketing problem they've got. But for those that do have rain, they need to take a step back and look at this situation for what it is. It's this rally of late was a bit of a gift. And so overall, I think the market structure is leading me to believe that you're not going to fall completely out of bed, especially with 2 weeks of the Western Corn Belt, quite frankly, not looking like they're going to get any rainfall whatsoever. And it looks like it's going to be pretty darn hot. With that being the case, it's going to be pretty tough to absolutely waylay these markets the way we saw today.
And that's a great point you make. That was exactly where I was going to go, is that with all of these factors in front of us still, weather, we got to worry about that here ahead. We look at, all this outside market pressure, et cetera. But to me, we have a lot in front of us yet in this grain market. And I think about just, you look at the cash side, you look how strong bases have remained. There is a need for grain out there, not just across the U.S. from end users, but across the world. There's worry about our crop here. We're definitely not at the finish line yet. And so I think some of these supply and demand fundamentals have been taking a back seat, but they haven't really changed, Matt. They're still there, and it's something we have to watch very closely.
That's for sure. And so when you stop and think about, if you looked at corn today, you got that little blip over 1.5 on old crop, new crop. You're pushing the 1.5 mark all the way around, okay? But what I want to say is this: look at your stocks use ratio. It's 10%. I mean, anytime you get below 12%, we typically say you're going to have a rally in the market, either a demand rationing type rally or, something to encourage supply, but you're going to get a rally in the market. And so 10% stocks to use ratio is tight. I mean, it's extremely tight. And quite frankly, on soybeans right now, we've had a couple of cancellations, but we needed to have cancellations. We were running above and beyond what the USDA was suggesting our export program was going to be. And you could have made a case for 100 million bushel carryout at times over the last few weeks. So, I mean, it's tight. It's extremely tight. And so, talking about that, you might say, well, why in the world would we ever go lower? We can't lose sight of one thing. This is a futures market, okay? And so we're all going to sit around and say, can we get enough supply to get to the next year? Can we get enough supply to get to South America's growing season? How much are the Brazilians going to plant this year? And in one word answer, a lot. Why wouldn't they? Look at the markets over the last several months. They're going to plant fence row to fence row. And guess what? They've got new fence rows because they keep adding acreage. And so we have to understand it's a global marketplace. It's a futures market. And we have had every chance in the world and still do to lock in copious margins, especially in a situation where we've got again, a really good risk management program, which includes insurance, which includes all kinds of stuff like that. So bottom line is, for me, it's not all lost. You're right. Fundamentally, we're still in really good shape. But we also have to understand that from this point forward, while I can make a case for higher prices if we stay warm and dry, one thing that we said as a team last week, Jesse, is that if this warmer, drier forecast offers you the opportunity at much higher prices, hey, you know what? Reward the market. Reward the market, because that's what we're supposed to do. Is sit there and study the market, study our situation. What is it that's going to make us money, and take advantage of it whenever it shows up.
Matt, let's talk livestock today. Feeder cattle, obviously the big winner, which I'm not surprised that sharp break in corn. It felt like it waited for the WASDE to come out, and then we accelerated to the upside in feeder cattle and maybe found a little bit of support we've been looking for in the cattle markets. Is that what you saw? What are your thoughts on cattle first off today?
My thoughts on cattle haven't changed much. As you know, I've been fairly friendly cattle for quite some time, with the caveat that we're going to raise a crop, and so if you raise a crop and you've got ample supply of corn and you're not going to $8 corn for perpetuity, I felt pretty strongly that feeders were going to be a pretty hot item. And then you get out into the end of the calendar year this year, into first quarter next year, maybe even second quarter. Tell you what, fat cattle could be extremely good property. Any cattle could be extremely good property. I think numbers would lead me to believe that it's going to be hard for you to really break this thing, especially, once again, if you don't take your feed costs up too much. You're exactly right. I mean, we learned that, back in college. I'll tell you what, if corn prices go up, feeders are probably going lower. I mean, it's just kind of the way it works. And boy, I'll tell you what, corn getting hit squarely on the chin today absolutely made a benefit for the feeder market. And that's probably something you're going to see. And it's a very dynamic market. Whenever the funds had been in here short this cattle market for quite some time, I'll tell you what, they don't stay short forever. In fact, there's been a lot of times whenever they don't get short at all, but they had been short, and I think they've unwound some of this. I don't think that they want much more of the fun that provided for them over the last 3 weeks. And so I do look for these feeders and fats to be good property moving forward. Again, with hogs, I mean, I don't know, $113 front month. I still feel like that's plenty. You're going to need a lot of demand, a lot of export demand to be able to keep hogs over $110 is just my personal opinion. But I would say this, if the cattle market does stay as strong as what I think it might, it's probably going to be supportive towards the pork as well. I think that you could see hog prices fairly competitive as well.
Well, and I know it looked like we had a little support in the cash hog trade here today as well. But I think, too, with hogs, to your point, I'm watching that July contract getting ready to go off the board. August right behind it. We got a bit of a discount there between July and August. Then you look out to October. I mean, we're way down there. So I'm going to be interested in the next couple of weeks how the dynamics shift in those front month hog futures here, Matt, to see if we, say in October, we come up to the August contract, or if the August comes back down to that October contract.
Yeah, I mean, the thing is, it's a huge inverse, a big front-loaded deal there. Are we going to be able to stay above $100 on front month? I think is something that you and I could debate all day. Personally, the only way you do that is going to be maybe both things, but exports are going to have to be really strong, first of all. And second of all, you keep these cattle prices hot. It's going to be hard to kill pork prices. So, I think a lot of times they do run hand in hand. I mean, it's similar to corn and beans. When one of them goes up, sometimes the other one is going to go up. I've got to think that if people are, if you run cattle prices high enough, and you go to the steakhouse and you stop and think, when you really want to buy a ribeye, that maybe you're going to buy a pork chop, that's going to be supportive towards pork, if that steak goes too high on price. Now, for me, I'm willing to eat steak and drink a glass of water if I have to. If it's a good steak, I'm still going to go for the steak 9 times out of 10. But you know what I'm saying? It could be supportive for both. But yeah, as far as livestock is concerned, if you keep corn from rallying substantially, I think all the way across the board, you've probably got some strength in these livestock markets.
Matt, fantastic analysis as always. Before we run out of time, any final thoughts for us today?
No, just keep your head. Let's keep our wits about us, and let's think about what blessings that we've had over the last several months. These prices are still good historically. I know they're not what they were, but that doesn't mean all is lost. And so figure your profit margins, lock them in, and then hope for a better day.
Well, Matt, I know if folks need some advice, they can reach out to you and the team there at agmarket.net very easily. Phone call, the website. You guys have an app they could check out as well. A lot of resources for people to use, don't you?
Yeah, absolutely. We got a lot of good things going on. Hey, we just opened our 10th office the other day, so we've got a lot of good things going on. Feel free to get a hold of us. Find us at either one of those places.
And again, agmarket.net is a great place to start. With that, Matt Bennett of agmarket.net. Appreciate it as always, sir. Have a fantastic week, and we'll talk to you again soon.
Oh, absolutely. Thanks, bud.
And again, that is Matt Bennett of agmarket.net. That's going to do it for today's Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.